The gold fix. Everybody's talking about the gold fix coming to an end and a new gold fix coming into effect. An electronic gold fix. And does it matter? I say no. I think that it will be just the same as before. An electronic gold fix is still a gold fix. A gold fix by another name is just the same. And here's why. Many of the same players that were involved in the previous gold fix are going to be involved in this new gold fix. And so how does the LBMA gold price fixing impact your investments? This article here will show you a bit on that, give you some more information. And then also we want to look here at Goldman and UPS, UBS and Goldman fixing banks for new LBMA gold price fix. So you see, they have a vested interest in being able to control the gold price based on ebbs and flows, more volatility. That's where they make their money, based on a free market where the price of gold and silver and other precious metals remains relatively stable based on supply and demand. There's less shortages. You get the picture. And this is why it's important to have free markets that are open and price discovery being intact so that the average investor doesn't get hit by these huge drops and rises in prices when they're buying future contract or when they're holding bullion and they're trying to plan for their future. It's quite obvious as to why a fix hasn't been a good thing for the average man. Now, I think that the Chinese, their gold market, when they get involved in the gold fix, will be more of a significant move than the recent electronic fix that's been changed over here just days ago. Basically, how do you know if the Chinese coming in to the gold fix is an effective thing? Well, if you've noticed over the past, the west price of gold and the east price of gold have never been exactly the same. And this is how you know that there's no free market and that there's no real price discovery, because the Chinese, the people in the East, the Asians, they value gold a different way, and they have their own price fix. But if you're going to avoid an arbitrage which could make China's gold holdings an issue, because remember, they're net buyers of gold. They do not want to sell gold. In fact, it's illegal unless you're in a government-approved business to export gold out of China. Okay, they're buyers, they're holders, they're not sellers. And if there isn't a great arbitrage there, what's going to stop foreign entities from coming in and dumping their currency and buying up gold, the good stuff, and taking delivery on it from the Chinese? So that will be an interesting development to play out if the Chinese banks are directly involved in fixing the gold price. They can arbitrage price differences, and that's what they probably want to do, and that will help prevent them from getting blown away by speculators coming in, taking delivery, and taking away all of the advantage of the Far East. Goldman and UBS join new gold price fixing. No Chinese banks yet. Yes, this is another article here that will help to explain the significance of the Chinese eventually coming in to the world gold price fixing rather than having it just controlled out of London and New York. Let's take a look here at asset performance from 2000 until February 3rd, 2015, last month. Now, for all of you that say that gold and silver are not assets that have a return, that it's just worthless, that you can't eat gold, that silver hasn't performed very well and it's too volatile, on and on and on, take a look at this. Assets change, okay? US dollar change, gold change, precious metals. What asset has performed the best? Well, it's a no-brainer now. It's gold, silver, platinum, palladium. Look at the change versus US dollar since the year 2000. That's pretty significant right there. And that's why those of you that have been holding precious metals for a long period of time are doing quite well. There's no reason to really be in any of these currencies that are down against gold since 2000. Even the stock market indexes have not outperformed precious metals. Let's take a look at dollar index and a disturbing chart to be sure. Great financial collapse triggered by derivatives and counterparty defaults. Right here is the run-up to 2008 financial collapse. You see dollar strength, parabolic, and then bam, bam, huge drops there. And then you see also what's happening now. Huge dollar strength, even more than before. Index going up to about 100. And what's going to come next? Well, you be the judge of that. I think that we're headed for some very uncomfortable times here, not just because of this chart, which is telling, but also because we are on a 7-year cycle that a lot of the elites in the banking community have been talking about in coded speeches and writings. Christine Lagarde being the most recent. 7-year cycle, 777, significant number in a lot of religions and also in the minds of these power brokers. And guess what? The 7-year cycle from 2008, that will coincide here this year. So the fiscal year ends in around September, and that's for the government. So what's going to happen? Well, I would be very shocked if there weren't some fireworks here coming up here in late fall and into the winter, because all signs point towards that. What do you think?